So, a very good morning to both of you. So, today we will learn the formula how to calculate interest on securities. There are two types of securities: tax-free and less tax. Tax-free, we have government security and private security or commercial security. Similarly, less tax, we have government security and commercial security or private security. How to compute interest? Now, the formula, we will learn the formula first before doing any problem. Now, let us find out how to calculate net interest. Net interest is equal to, so to find out net interest is equal to the formula to calculate net interest is equal to face value of investment. Face value of investment. Face value of investment multiplied by interest rate. Multiplied by interest rate. So this is the formula, simple formula to calculate net interest. Face value of investment into interest rate. Okay. So this is the formula to calculate net interest. Now, what is the formula to calculate gross interest? Gross interest is equal to gross interest is equal to. Now, in the problem, we need only gross interest value, not the net interest value. We need to compute gross interest. So, gross interest is equal to 100 by 100 minus rate of tax. 100 minus rate of tax. And you know that we discussed the last verses. The rate of tax on interest on securities is 10%. 10%. Or in other words, TDS is 10%. That means you have to pay 10% percentage tax on interest on securities. So, therefore, that is equal to, if you take 10%, if you take 10%, 100 minus 10, okay, 10% is on interest on securities, so that is equal to 100 minus 90. Because we are taking 10%, 10% you have to pay interest on securities. You have to pay 10% interest on securities. This is gross interest on securities. Gross interest on securities. Now we need only gross values, not the net values. Now suppose you are winning the amount from lottery. You purchase lottery. You won the first prize, the second prize, or third prize. In that case, what do you do? Now, in the problem, suppose in the problem, the formula to calculate gross winning from lottery, in case of lottery. So, gross winning from lottery formula is gross winning from lottery. We need only gross value, not the net value, and depends on the problem. Gross winning from lottery. How to calculate gross winning from lottery is equal to 100 divided by 100 minus rate of tax. Rate of tax. As you know that winning from lottery comes under casual income. All casual income you have to pay 30% rate of tax. 30%. TDS is 30%. TDS means tax deduction at source is 30%. So that is equal to 100 divided by 100 minus 30. Because 30% if it is winning from lottery or winning from any casual income. So that is equal to so 100 by 70. So this is the formula you have to apply to compute gross winning from lottery. The previous one is gross interest on securities. And how to calculate net interest? Face value into interest rate. How to calculate gross interest is equal to formula is so 100 by 100 minus rate of tax. That means if it is TDS on security, interest on security, it is 10%. So we should add here. So this is the gross interest. This is gross interest means net interest into. It's a small change. Net interest into. Net interest into. And here also same thing. Net interest into. Net interest. Net interest into. This is the brackets into. This is 100 by 90. So I remove this part. What is this? So net interest into 100 by 100 minus 10 is 90. So this is the how to compute gross interest value. And net interest is base value of investment into interest rate. Gross interest means net interest into 100 to 90. And in case of gross winning from lottery, see when they say here in case of gross winning from lottery, this can add amount received or say net amount into 100 by 70. In case of it is winning from lottery. So this is the formula you have to apply if you want to calculate net interest, face value into interest rate. If you want to calculate gross interest on securities, net interest into 100 by 90. Suppose you have to calculate gross winning from lottery, net amount received into 100 by 70. So these are the formula where you have to apply to compute interest on securities and winning from lottery. Right. So you make a note of this. And this session is recorded live, so I will post the Moodle. It's a very important session. So I'll start from here for our latecomers. Computation of interest on securities and winning from lottery. Now, how to find out net interest? Net interest is equal to face value of investment into interest rate. How to calculate gross interest on securities? Net interest into multiply into 100 minus rate of tax. And here rate of tax is 10%. 100 minus 10, 90. So net interest into 100 by 90. This is how to calculate gross interest on securities. Why 90 this? We have to pay 10% TDS. Tax rate is 10% on securities. On interest on security, pay 10% on interest on securities. Now, suppose we want to find out the gross winning from lottery. Gross winning from lottery, how to calculate? Now, so for in case of lottery, because lottery is considered casual income, you have to pay 30% rate of taxes. So 100 by 100 minus rate of taxes. 100 by 100 minus 30. So then that equals 100 by 70. So you are getting any amount from lottery agency, take the net amount, multiply into 100 by 70, you will get the gross value. You will get the gross value. So whatever the value, you get gross value. You get the gross value. Now in the question, in the problem, sometimes what happens, if nothing is mentioned, is it gross or net? Suppose simply in the problem, it will give you winning from lottery, that's all. Winning from lottery, some amount may give the problem. In that case, what you have to assume, the amount given is nothing but gross value. Okay. And suppose it's given net amount in the problem, you have to find out the gross value. And sometimes what happens, you may give it other way also. Received from winning from lottery. Received from winning from lottery. That means you have to find out the gross value. That means whatever the amount received, net amount received into 100 by 70, you get the gross value. In which case, suppose if you get a word, a sentence like received from lottery or received from winning from lottery, that means you have to convert to the gross value. So this is the thing. And we'll find out the when you have to find out gross interest, when you have to find out net interest. In both the cases, we have tax-free security and less tax security. In tax-free security, we have government security and private security. Similarly, we have less tax, government and private. Private means commercial security. How to find out whether you have to find out gross interest or net interest? We'll discuss now. Now you have to draw a table. To draw a table, I'll just turn this next slide. How to gross up the value? How to gross up the value? Now you have to remember all these formulas. I'll just turn it. I'll turn this. Change the table. Now these are recorded live. So we can get in a model. I'll change the table. So now you have to draw a table. How cases or net interest. So please focus on the board. Focus on the board. We draw a table. This is summary of gross income. Summary of gross income. Summary of gross income table. Now, we draw a table containing two columns. First column is nature of security. Nature of security. In second column is gross income. Gross income. Now, first type of security, if the security is tax-free government security. It is a tax-free government. Government means state government or central government. Government security. Tax-free government security. State or central or and less tax government security. Less tax government security. Okay. If it is a tax-free government security or less tax and less tax government, both the cases. Both the cases. Whatever is interest received, whatever is receiving interest, whatever you are receiving interest, that is already grossed up. Is already grossed up. No need of grossing. No need of grossing. That means in this case, you have to no grossing up, so already it is grossed up. In this case, only you have to calculate net interest only. You calculate only net interest. Whatever net interest is gross interest. Whatever you have to calculate interest, but net interest itself is a gross interest. That is equal to net interest is equal to gross interest only. How to calculate net interest? Face value into interest rate. Our face value investment is equal to interest rate. This is in case of both tax-free and less tax government security. Government means any state government, or even if it is a development authority sponsored by the state government or central government or RBI or any national banks. And there are some securities which is totally exempted from tax that we discussed already. I'll post the material in the WhatsApp group. Don't worry about that. Now, in this case of less tax and tax-free, both government security, you have to calculate net interest. That net interest is from. Now, in case of second one, in case of tax free, this is the second one, tax free commercial security. Commercial means private. Commercial security. Private security. Private companies. Securities issued by private companies. Okay. If it is listed and unlisted, both. Listed in stock exchange or unlisted, both. Listed and unlisted. It may be listed or unlisted. Securities issued by the private companies is called the tax-free commercial security. And securities issued by the government agencies or state government or central is called tax-free government security. Is it tax-free or it's less tax? It may be both. What you have to do is the tax-free commercial security means private security. Now, in that case, you have to find out gross value. In this case, you have to find out the gross value. How to find out the gross value? To find out the gross value. So, gross value is equal to net interest into 100 by 90. By 90 because we take 10% TDS, tax deduction at source. In case of tax-free commercial security, both listed and unlisted. Similarly, even if it is a less tax commercial security, both listed and unlisted. Both listed and unlisted, the same formula. Listed and unlisted, the same formula. That means we have to calculate gross. Value. How to calculate gross value? Net interest into 100 by 90. But how to calculate net interest? Net interest is equal to face value of investment into interest rate. Okay, so this formula applies in case of tax-free commercial and less tax commercial. Commercial issued by the private agencies, private companies, private authorities, or private organizations. Government security issued by the state government or central government or RBI or any nationalized banks or government and bank. So if it is a tax-free government and less tax government security, no need of grossing up. You have to directly calculate net interest. And in case of tax-free commercial and less tax commercial security, you have to calculate gross value. How to calculate gross value? Gross value is equal to net interest into 100 by 90. This is the way how to find out the interest on securities in case of less tax and tax-free, in case of government and in case of commercial security. Right? So we do a simple problem. The class. All these are recorded live. All these are recorded live. Now we'll do a problem. How to identify it as a government or private? The name of the state government is given. If the name of the state government is not given, then it is called private security or commercial security. And what happens in some cases, it will not give you the nature of security. That means whether it is a tax-free or less tax. Nothing is mentioned. Nothing is given as a tax-free or less tax. The assumption is you have to take as a less tax security. Less tax security. Nothing is mentioned. The problem is a tax-free or less tax. So nothing is mentioned. You have to consider as a less tax security. There is a government security. If it is not a government, less tax commercial security. Then adding up all the interest you received, add up all the interest values. Of adding up all the interest, we get total income on security. From that, you have to make some deductions. That deductions is called under section 57. The famous deductions where you can subtract this collection charges. collection charges, or you're taken a loan to buy the securities, you're paying interest on that, interest on loan taken to buy the securities, that you can take under section 57, reduction section 57. Now, very simple problem, small problem. I'll write on the board a small problem. Okay. I'll change the table now from different positions. I'll write the problem on the board, then I'll show you how to calculate it. Now, take the problem now. Just I'll write the problem. Change the position of the table. So I'll write the problem on the board now. Now, the problem. Nikhil held the following investment. Nikhil held the following investment. Nikhil held the following investment. Nikhil, is there listening or not? I don't know. I'm taking his name. First, 90,000, 10% tax-free debentures of listed company. So he had the following investment. The first is 90,000 the base value, 10% the rate of interest, and tax-free debentures of listed company. That means it is a private debentures, commercial security debentures. Second one, 50,000 is a face value. 50,000, 12%, okay, tax free. So nothing is given tax free or less tax, less tax only. If nothing is given the problem. Punjab government loan. Punjab government loan. This is free government security. It's a tax-free government security. Third, he has given collection charges. As 2,000 rupees. Collection charges as 2,000 rupees. So compute his income. His income from interest on securities, okay, for assessment year 2020-21. So this is a problem given. You are getting short problem in short questions. Okay, now what I do, I'll write this statement. First column particulars, second column rupees column. The first column particulars, second column rupees column. Right. So this is the problem. You have to compute is income from interest on securities. Right. Now, I'll write the format procedure. I turn the table here. I turn the table. Procedure is there are two columns. First column is particulars. Second column is rupees column. Rupees column. There are two columns of this. Heading should be computation of income from interest on security. Income from interest on security for the assessment year 2021. I am writing in very small form for the assessment year 2020-21. The heading here to write computation of income from interest on security for the assessment year 2021 or 2020 to 21. Okay. Now, in the problem, he has given tax-free debentures of listed company. That means it's a tax-free commercial security. It's a tax-free commercial security. Okay. So you have to write here in the particulars column as 90,000 dash hyphen 10% tax-free debentures. Tax-free debentures. Now, because it is a private security issued by the private sources, private company, it comes under tax-free commercial security. You have to find out the gross value. You have to find out the gross value. Before finding gross value, you have to find out net interest. What is net interest? Face value into interest rate. Net interest. First find out the net interest. Net interest is equal to what is the face value? 90,000. 90,000 into what interest rate? 10%. 10 divided by 100. You will get net interest. Net interest is equal to 9,000. You get 9,000. Then you have to find out the gross value. What do you find gross value? Gross value is equal to net interest into 100 by 90. So that means 9,000 into 100 by 90. Okay. 9,000 into 100 by 90, you will get 10,000 in the rupees column. You got the gross value as 10,000. This will be how to calculate gross value or gross interest value. Right? This is in case of tax-free commercial security or tax-free private security. It may be listed or unlisted. It may be anything, listed or unlisted. Now, the second one is given tax-free Punjab government loan. Punjab is a state government. Right, 50,000. Copy and paste 50,000. 12% tax-free Punjab government loan. Punjab government loan. Now it is a government, Punjab is a state government. The state government security or government security is a tax-free government security. Directly you have to calculate net interest. That net interest is equal to the gross interest. So what is the face value of the government sector? 50,000. So find out the net interest. How to find out net interest? Net interest is equal to face value 50,000 into 12 divided by 100 interest rate. 12 divided by 100. So you will get how much it is? You will get 6,000. You get 6,000 in the rupees. Here you should not gross up. Why? Because it's a tax-free government security. You should not gross up. Whatever the net interest you got, the net interest value is equal to gross interest value. Gross value. You got 6,000. Okay. So here everything is over. Add up 10 plus 6, 16,000. 16,000. Okay. That is nothing but gross interest value. Gross interest value. You got a gross interest as 16,000. Then you have some deductions. From gross interest, subtract, reduce deductions. The deduction is nothing but under section 57. Under section 57. In that problem, he has given collection charges. Collection charges means expenses incurred to buy the security is called collection charges. You can allow the deduction. So collection charges, we'll take the collection charges. How much is the collection charges? It is given in the problem as 2,000. Collection charges. Collection charges as 2,000. Reduce 2,000 from 16,000. You will get 14,000. 14,000 is called income from interest on securities. Income from interest on securities. This is the way how to calculate income from interest on securities. Okay, so I hope you understood that. I will take the screenshot and post in the WhatsApp group. And remember, focus both on theory and problems. In the problems, you will get maximum marks. So I stop here. I taken a lot of time. You might be blaming me